couple of days, we've turned from sell to buy, so that's why the change in hairstyle.
Okay. On that note, Amy's got a question for you. This is coming in on YouTube, and it's essentially a question that will go with your hairstyle, because she's asking, with crude trading around that $120 per barrel mark, is this sustainable, the bounce up we're seeing? And she's specifically asking about the bank nifty.
So I believe it could be dual. So what happens is, when crude starts off into a rally mode, it doesn't immediately mean that the markets would get into an end of a rally phase. But then both of the extremes have to happen at the same time as well. So what could probably happen is, crude can continue to move up higher, maybe touch $125, $130 per barrel as well, assuming if there is any continuation move on the upside. But at the same time, even the markets can continue to rally for a few more days. But it's just that when the rally gets extreme on the crude side is where the markets would take an abrupt U-turn. I'm not sensing at least anything to pan out as of now. But you have to keep this crude factor in mind, specifically from a positional play, because more sustainable rise or spike in the crude oil prices, of course, could bring the rally to a halt. So what you have to do is, you have to play with this momentum, play with the trend, on the short-term side on the indices. And whenever you see the index trailing lower or getting into a reversal mode, that's the first time, where you should probably try and book out your positions, or at least trail your stop losses for whatever longs you're carrying.
All right. Sharmila, coming to you, good morning. Vikas Negi has written to us, and he's asking a question about Nykaa. He's saying that he's purchased Nykaa at an average price of around 1,800 rupees per share. He wants to know whether he can average his holding right now. Does it make sense for him to do it from 1,800 right now? You can see the stock price is hovering around 1,350 odd levels. So what should he do? Make sense to average at these levels?
Well, he can start, but I would sort of suggest that go a little slow even with the averaging, because now we have a situation. Ideally, you should have done it when the entire market was correcting and the stock was also correcting. Now it seems to be on a bit of a bounce, so this might not be the correct time to average it. In terms of valuation, honestly, the stock still looks overpriced. I think the earnings have also not really supported the kind of listing gains that we saw. So, these are sort of what are called concept stocks when you have a market that's doing well, which is when people start looking at places where, that this is something that could potentially do well, and they are on this expansion plan. So even, the higher valuations are justified because they will see that growth, etc. But when you're in markets like this, it might make better sense to focus on earnings. So I think the short answer is yes, you can start, but do it very gradually.
Okay. We've got a question coming in from Vijay, and he's asking about Bandhan Bank. He had also asked about the benchmarks, and Kunal, you've answered that, I think, very well. Bandhan Bank, he's asking about whether it can be, so can one sell a 300 put or buy a future and sell 310 call? That is the question that is coming in on Bandhan Bank. What's the view?
So I think both the strategies are quite good enough. 300 now, seems to be a good base for Bandhan Bank. I think the last 1 month, 2 months of this market volatility, the stock had not broken this 300 mark. So it came to test, it had come back to test the 300 mark, but then it failed to break, below that significantly, and it bounced back quite sharply, which means that the 300, mark could be a good support. The only catch with this strategy is how much premium. I'm not sure how much premium the put is trading for Bandhan Bank at the 300 strike, but if it's substantial enough for you to try and initiate a strategy, then I think that would be a better bet. Even buying a call and rather buying a future and then hedging with a call could also be a good strategy. So that again depends on how much risk and how much capital you're willing to put. But I think both these strategies seems to be good enough.
All right. This one is coming in from Harish Kumar, and Harish has written to us from Bengaluru, and he wants to know whether it's the right time to enter Tata Motors for 1 year. He wants the view on technical front. So Kunal, what's your take coming in on Tata Motors? Do you think now is the right time to enter the counter?
Well, I'm extremely bullish on Tata Motors. I've been very bullish on Tata Motors since last 2-3 years, and I still maintain that stance that it's a good buy on dips, kind of a candidate. Now at 440 levels for Tata Motors, it's also on the verge of a technical breakout. But then you have to look at the construct of the auto stocks as well. They have already started to get into that first phase of outperformance. So possibly a better strategy would be that you start buying at current levels and keep maybe some powder dry, maybe 50% of your expected quantity to buy, assuming if there is any correction or any retracement towards the mean, which could happen for Tata Motors, and possibly the stock comes say closer to 410, 415 levels. That would be a good point where you can look to average further.
All right. Ramya's got a question for you. Sharmila, this is on HCL Technologies. She says that she's a new entrant to the stock market and she's contemplating this as her first buy. She's wondering whether prices will fall from this point. Is that something that she should be mindful of?
It's a good stock. I think we are talking of HCL Tech, and I think within the IT space, it would be like sort of my favorite stock among the large caps. What I would advise is also buy a mid cap along with it and do a sort of a staggered buying. Simply put, because I think that to my mind, this is the correct environment to buy IT stocks in because numbers have been decent, and at the same time, rupee doing what it is, it makes sense to be in a sector which is sort of export facing. But over the last couple of weeks, we've had a lot of negative outlook on IT, where there are a lot of brokerage reports saying that they will not get orders because there's a recession going on in the US. So I think the situation is fluid again, to put it in a single line. So do a staggered buying, but yes, I think this is a stock that you can start your investment journey in.
This one is coming in from Neha Toteja, and she's asking this query to you, Kunal, and it's on ONGC. She's saying she's bought ONGC at a level of 167 rupees per share. She wants to know whether she can average right now with a 6-month view, because she's already making a 15% loss. And if you do not suggest averaging, then she wants to know if she could look at some high dividend paying stocks to buy that are fairly priced. And she's saying other than Vedanta, IOC and BPCL. So a lot of questions are rolled into one, but what's your take on ONGC? What should she do? And which are the high dividend paying stocks that she can look at?
See, I think one of the stocks which you can probably look at is ITC. I think that's a much better name. And I think, if I'm not wrong, the stock dividend yield is also, I think, around 9% or 8.5%. I think Sharmila can probably correct me over there. But then, chartically, that's a much better stock. ONGC, for ONGC specifically, I don't suggest an averaging at current levels. Now, even though the charts have corrected, the stock is below the 200 moving average. But, I've seen this point with ONGC that it doesn't tend to have a strong follow-through price action. So 2 months back, the stock was one of the better performing, PSU names. But then this month, you've seen the stock actually get into a corrective phase, and it's retraced almost the entire gains of the last month. And this is what you don't want to have, into a formidable stock, where whatever gains the stock sustains, if it's unable to retrace or retain even the 50% of the gains, and it retraces in fact the entire gains, which means that it's an inherently weak stock. So ONGC, I would suggest not to average. In fact, if the stock bounces to 150, 152, you can look to exit. And from a high dividend paying stock, I think ITC could be a much better bet.
All right. And by the way, Cheryl, that is the conversation, the first conversation that we're going to have on the ET Money show this evening, the dividend strategy. Should you buy a basket of stocks that will pay you dividends? And is that something that you should consider doing? Let's take the next question from Chandrasekhar. This is on City Union Bank, which he bought at levels of 146.8. Sharmila, this one's for you. He's asking whether he can hold for a year or should he exit at this point?
I think he can continue to hold since his outlook is for a year. Yes, I think it's a hold.
All right, this one is coming from Dheeraj, and Dheeraj wants to know whether he can start accumulating Indian hotels at current levels from now on, is what he's asking. What's your take, Kunal? He wants this answer specifically from you. So Indian hotels, do you think now is the right time to look at accumulating this particular counter?
Well, yeah, I think it's been a fantastic chart. The last 2 years, Indian Hotels has moved very, very steadily. So I remember this point where 2000 till 19 odd, the stock used to have a major resistance at 160 mark. That used to be the previous, major highs. And once that was crossed in this, post, COVID rally, is where this 160 mark has actually become a base for Indian Hotels. So yes, it's a good strategy to buy the stock. I would probably suggest that, look at maybe something like a Lemon Tree as well. It's a slightly higher beta name, but if you can probably allocate, capital in the sense where you can look at maybe 70-75% of your capital invested into Indian Hotels, and maybe the remaining 15-25%, odd in stocks like Lemon Tree, that could give you a better boost both the stocks look fairly attractive, and the space also looks quite strong from a medium to long term play.
Do you have enough on Veranda Learning? I'm just looking at the share price to see where it's currently trading. It's up about 5% now. And the question is coming in from Krishna. He's bought, he says, at 52-week high levels. Should he hold at this point?
I don't have enough trade history. Of course, I think the history is just limited to just about 1.5 to 2 months. But then, the stock is also showing signs of minor bottom formation at this 180, 190 level. So keeping that as a support or a stop loss, you can look to maybe build up some more long positions. And assuming if the stock comes, say, midpoint towards your previous high, say, closer to 240, 245, that could be a good point where you can look to maybe look out to exit your holdings as well as reconsider of putting your money into large cap names.
All right, this one is on Paradeep Phosphates, and since it was listed as recently as last week, so I'll come to you, Sharmila. I'm not sure whether you have coverage on this one, but Natarajan Ramesh is asking if it is okay to purchase Paradeep Phosphates of approximately 45 at the rate of about 45, I believe he's asking, for 2-year horizon. What's your take on that one, on Paradeep Phosphates? Given that it is a recently listed counter, what should he do?
I think he can look to buy, especially since he has a 2-year horizon. I'm not very sort of versed with Paradeep Phosphates particularly, but I'm positive on the phosphates business. And looking at the price that it's at, yes, I think you can sort of slowly buy into the stock, again staggered buying. And I think, as he said, he's got a long-term horizon. So yes, he could look at Paradeep Phosphates.
All right. We've got another one. This one's for you, Kunal. Zydus Life is the name of the counter. We've got Kunal from Mumbai who's asking about June targets, if you can give that.
I think Zydus Life was one of the stocks which I discussed last week as well. And my sense is that the stock is showing some big turnaround points on the weekly as well as on the weekly time frame, which means from a medium to long term play, the stock looks very, very attractively priced. The volumes in the last 1 week was exceptionally strong for Zydus. I think that makes the charts all the more attractive because it's come back after almost 1 year of the stock going into a downward trend, which means that there is a strong sign of a turnaround. Now, very difficult to categorize that where the stock would probably look at in terms of a short-term upside. But if you have a time horizon of 3 to 6 months, I would be pretty confident of the stock coming back towards 450, 455 in that kind of a time span. So if you can extend it to maybe 3 to 6 months, then that could be a potential target which you can look at for the stock.
All right, I'll request you, Kunal, as well as Sharmila, to hang in there. We'll just slip into a break on this edition of Buy Now Sell. And to all of our viewers as well, stay tuned in. We'll be back with your queries, so don't go anywhere.
The personal financial
telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost